afternoon, sir.
Good afternoon. So today my plan is to show you how the income statement balance sheet is prepared from the trial balance, and I'll also take a lot of questions. Then we'll be meeting in the term one, I guess, after some time.
Sir, it is on online. Term one is also online.
That I think the communication you will receive very soon. I am not, in fact, even I am not aware about this, so I don't know what should I
Okay.
say. Is Hinal there? Hinal? No, Hinal is not there. Shall we start the session? Because it's time.
Yes, sir.
Uh, so, good afternoon, everyone. This is going to be the last 2 hours of this basic accounting course, also called Accounting Fundamentals. Now, before I start, can someone remind me why we are going through this course? Can someone tell me why we are going through this course in the time others are joining? Please participate one by one. What's the point of going through 14 hours before the actual term? What is the idea of learning this basic course? Can someone tell me, beta?
Sir, we are from different backgrounds, so to be in a same page,
Right.
everyone.
So just so that everyone understands in the same manner, everyone understands the accounting, right? See why we are
Yes.
doing this course. The idea is that all of you are joining a BBA, MBA, or any management program. The idea is that you want to become a manager or you want to run your own business. And when you are running your own business or when you are a manager, you require to take decision, and that decision requires information. And so the one of the information that helps you make decision is accounting information. Now, to understand accounting information or to make a judgment out of the accounting information, you need to understand accounting because it is a totally different science as we have been discussing. And most of you would agree now that accounting is not that difficult. At the same time, accounting is technical. That is also we have established over this 12, 13 hours time, right? So now this is the picture of accounting, right? The idea of accounting. This is the idea of accounting. Now we are not going to limit ourselves to only this, but we are going to use this for making decisions in the future. So that's the idea. We have identified, measured, we have recorded the transaction, we have classified the transaction. Now we are into summarizing portion. So let us focus on that. What is summarizing? Can someone tell me? Can someone participate? Because others are joining, so I don't want to go too fast right now. Yes. What is summarizing? Can someone participate, please? Anyone, everyone gets my voice?
Yes, sir.
So what is summarizing? Can someone tell me?
Basically,
Anyone?
the just reviewing the main points of all what we have learned till now.
No,
So
no.
it's like CGP.
Okay, okay. Summarizing
Sir,
means
it is classified data in a manner which is understandable and useful to management and other users of such data.
wonderful, right? So let's say if I want to invest in Britannia company, I would not go through all the transaction that Britannia had over the year, right? Makes sense, right? I don't need to go through millions and billions of transactions to decide whether to invest in this company or not, because at the end of the day, you want to know, just like your parents are asking you that, you may be a good student or bad student, how much you got in the from the examination. That's the whole purpose of doing things, right? Similarly, in accounting, the idea is to come up with some conclusion, and so that you can make sense out of, you can make decision out of that conclusion. So conclusion is the summarizing part. Now when I say summary, I'm talking about basically three statements: income statement, balance sheet, and cash flow statement. Do not worry if you feel that only 2 hours are given to this, because we have entire one course focusing on this, so you need not worry, right? So summarizing, today we will be focusing on two things: income statement and balance sheet. So that is also called summary of financial information. Analyzing, interpreting, and all that will focus in the next term. And analyzing and interpreting is also ratio analysis that you would be learning in coming courses for sure. So let's move on. So let us start with the trial balance. Someone has posted in the chat box presentation of data in a simple manner after this pre-decided period so that anyone can understand. Wonderful, very good. To present the entire information in short, compact way to enable the in analyzing and interpreting further. Very good. All of you are right. Wonderful, wonderful. And to prepare financial statements, that is summary, that is balance sheet and income statement, you require summary of all the accounts. That is trial balance. So trial balance has each of the accounts listed one by one, and there you have balances. So all the accounts have balances, and all those balances are listed in the trial balance. Now those accounts, as you know, those accounts could be an asset, those accounts could be liabilities, those accounts could be equity, those accounts could be incomes, and those accounts could be expenses. And in fact, we had spent a lot of time on that last time around. I have also received a mail from students that they would like to discuss few of the questions of the last class, that if we have time, we will definitely discuss today for sure. I don't think that I have content which could last 2 hours. because I wanted to discuss with you. I wanted to ask you questions, and I wanted to know your queries also. So I have not put a lot of stuff. I have just selected only 2 questions, and which will not take much time. Right? So the idea is to prepare income statement. Now, what is income statement? Income statement is like your SGP. Now, do not use these examples in the examination. That is just for just so that everyone understands. Understand, right? Because a lot of students are coming from different backgrounds. They may not understand if I use technical terms. So that is why I'm saying that performance is always for a period. That is why. So income statement is capturing the performance of a business for a given period. So when I say how was your performance, so you will say for which month you are asking, so on. So performance is always for a given period, and all your performances also makes your balance sheet or makes your financial position. So in fact, income statement is a subset of balance sheet. It is a part of balance sheet because ultimately you want to know the position, and your position is made by your performance. So income statement is a subset of balance sheet. Please remember that. I would also request everyone to download the annual report of Asian Paints because we have selected that for few sessions discussion. I think the term 1 course, that is financial accounting and reporting course, is of 15 hours, and we are going to spend 3 to 4 hours at least on that annual report and understand how the information is put together, because that's the idea of this course, right? I don't want you to become an accountant in term 1. I want you to become a manager. I want you to make decision out of that financial statements. For similarly for FB, I am going to select the same case, same annual report, so you may also download. In fact, everyone should download this annual report of Asian Paints, and that we are going to use for our course as well.
1920
No, 1920 का नहीं होगा अभी तक बेटा, because it takes time. So 2000 आ गया है तो आप वो ले सकते हैं, ठीक है? Download both the years. I would request you to download for both the years. If it is available for this year as well, you can download.
So today is the AGM meeting of Asian Paints. So today it's
wonderful. Such a nice information that you brought. So you download both of them. So annual report आ जाएगा बेटा, आ गया होगा, ठीक है? So please download both of them and start reading so that you understand what we have learned, and is it really helpful to you in making sense of the information, right? So please start doing that. So income statement, balance sheet, and cash flow statement. Cash flow statement I will not be discussing right now because we have given sessions for cash flow statement, and cash flow statement is prepared from the income statement and balance sheet. So first, anyways, we require income statement and balance sheet, and from income statement and balance sheet, you prepare cash flow statement. So let us focus on income statement and balance sheet today. Okay. So just like the last time, remember this is a trial balance which shows summary of all kinds of accounts, which may be having a debit balance, which may be having a credit balance. Someone has put up a link for downloading, so you can always capture the link. Wonderful. So the account may have a debit balance, may have a credit balance. So once again, like the last time, we are going to classify all of this into asset, liability, owner's equity, revenues, and expenses, right? And
Yes,
please also remember, I had mentioned that last time, that all the revenues and expenses go into the income statement because that is capturing your performance. Understand? What is your performance for Nirman University? I mean, Nirman University is not for profit, so I should not say it like a business. But if someone is running a coaching institution, for them the revenue is the fees they receive, right? And the expenses they incur to collect fees, right? Or incur so that they can provide knowledge, education, right? So that is how it is. So income statement covers 2 items, 2 kinds of accounts: revenues accounts and expenses accounts, because that is your performance, right? And balance sheet shows assets, liabilities, and owner's equity, because that is reflecting company's financial position, right? Because looking at only the assets does not give you the entire picture. You also need to understand who has claim over those assets. So if company has lot of debt, understand, if company has lot of debt, that is a risky business to invest in, because when I'm having a liability on my shoulder, that means every month, every year, I have fixed amount of burden. I mean, if you could ask your parents, and if your parents have taken a loan, understand, ask them sometimes, if there is an EMI, so there is always a burden of EMI on their monthly salary. So whether when they receive salary, the same moment they allocate certain amount for EMIs for loans, whatever they have taken. So liability is also good because it also gives you a leverage. And what is leverage? I'll discuss in we will be discussing in future courses. But it gives you a benefit that you can buy something for very cheap, you can get something for very cheap, you can get a loan for something very cheap. But if the company is not doing well, or if the company's revenues are not increasing or rather going down, in that case the burden is always there, whether you earn or nothing, right? You always have that fixed burden on your shoulders, so that is liability, right? So because we need to look at the assets of the company. Just a second, I'm admitting someone. We need to look at the assets of the company, we need to look at the liabilities that the company has, and we also need to understand that how much is the owner's claim, right? So owner's claim means if company has 10 lakh worth of assets and out of that 4 lakh liability is there, everything else belongs to the owners. That is their equity. That is their claim in the business. Right? Always remember the personal balance sheet that we have drawn, because that, you know, I know it is for individual, but it makes a lot of sense. It makes you understand this balance sheet concept easily. That, you know, in balance sheet you have two sides. There is asset, but at the same time there is someone who has claim over the asset, that is outsider, and there is someone who is from the business and has a claim, that is owner's equity, right? So let us do that. You can have a you can take a snap of this. Please take the snap of this. I hope all of you have taken the snap, right? All of you are in the classroom, all of you are listening to me, right? Please mention that in the chat box. Yes, thank you so much, Piyush. Thank you so much. So I hope you have taken the snap, and I think the sessions are recorded now. So anyways, you can always access these sessions, right? So yes, now I want you to help me. I have classified or I have separated the debit balances and credit balances. You need to tell me which ones are assets, which ones are liabilities, which ones are equity, which ones are expenses, which ones are revenues. So let us start with the cash. What is cash? Please mention that in the chat box, or let me ask individually and they will mention in the chat box. Let me ask people because I want to evaluate everyone, right? I also need to know where do you stand after this 14 hours. I need to see where my efforts have gone, rather you understood something or not. Okay? Piyush Chandravanshi, what is cash, beta? Piyush
Sir,
ji,
asset, sir.
why it is an asset, beta?
Sir, because we can use it for any other purpose.
Buying other assets, so it has economic benefit.
Yes.
The economic benefit is that you can use cash, you can invest cash and receive interest on
Yes.
investment.
Yes.
Very good,
Yes,
very
sir.
good. So stock is an asset. Sorry, cash is an asset. What is stock? Let me ask someone. Pravitha Vijayan. No, this is not that stock. Please do not mention in the chat box, because others will get a hint. Right? Please don't do that. Pravitha Vijayan, please. Pravitha, are you there? Can you mention in the chat box, beta, what is stock? Pravitha ji? No, this is not equity. Understand why it is not equity. Here, stock does not mean equity shares. I am talking about a stock of merchandise that the company is selling. So it is asset. I know stock word is quite frequently used in different ways, so it could create confusion. This is not equity shares, beta. This is just inventory of a business. So say for example, if I am buying and selling ACs, for me, having AC in my godown is stock. So it is that kind of stock, right? Very good, but at least you had an idea, I think. Yes. So it is an asset and it is a current asset, and cash is also current asset. Yes. Cost of sales. What is cost of sales? Can someone tell me? Please let me ask Priya Gagnani. Priya Gagnani ji, please.
Yes, sir.
What is cost of sales, beta?
Sir, cost of sales will be revenue.
What it is revenue, beta? What is revenue? What do you mean by revenue, beta? Can you explain? It's okay. You could be wrong, beta. Do
Income.
not worry, huh? It is income. See, cost of sales. Understand. Focus on the word cost. Can cost ever be an income if you are incurring? When I say cost of sales, what does it mean? The cost of earning that sales or cost of goods sold is also a word.
Okay, so it's an
It is a cost.
expense.
It is an expense, because what does it mean is that, let's say if I am selling this furniture, right? And so whatever cost I have incurred to make this furniture, direct cost, I am focusing on direct cost, right? We know the concept of direct cost now. So cost of sales represents direct cost. So cost I have incurred, direct cost I have incurred to make furniture is a cost of sales beta. So expense for making or procuring goods, very good. So it includes, so the definition is like this: opening inventory of goods. Oh, obviously, when I say opening inventory of goods, I'm talking about in terms of value, in terms of rupees, in terms of dollars, of course. Purchases during the year plus direct cost incurred ठीक है बेटा, ठीक है, it's fine, you can, if it is available you can download it, it's fine, thank you बेटा. Someone's mic is Priya Dagnani ji, please, if you could mute yourself. Yes, I have done that. Fine. So, guys, cost of sales means the cost of goods you have sold during the year. What is the cost you have incurred for that? That is the cost of goods sold. It is cost, it is expenses, always remember. Right? Yes. Can we go on, guys? Let's say yes in the chat box, please. If someone has query, they can ask, say no, yes. Fine. Thank you so much. So, what is GST refund? What is GST refund? Can someone help me understand what is GST refund, or what is it? It is an expense, income. Someone is saying income. Okay. Are you government beta? Are you government beta? Are you government beta? GST. It is a refund. Someone is saying asset. Very good. So remember, GST refund is an asset. It is like this, that let's say I have paid 100 rupees tax. And I don't want to discuss taxation too much because taxation accounting is totally different. But let's say, as per my computation, the tax liability is 100 rupees. And when I'm filing the return on 31st July for individuals, now this year the dates have been extended because of COVID-19. Or for companies, it is 30th September, let's say. Now on 30th September, when I'm filing the return, my tax liability according to the tax accounting may be different. So in case when I have paid more taxes, I should get a refund. So it is like this, I have charged more expenses by mistake. So what is GST refund? It is an asset because it has an economic benefit. Economic benefit is you are going to receive this in the future from the government, GST department. So it is an asset. It is a short-term asset. It is a current asset because you are going to receive this within a year time. Of course, government.
Sir, will it be like GST? Anyways, we are paying, so we are giving assets, and when we are getting
It is like this: you have paid the GST, and you had paid excess GST. You had paid more GST.
yeah, so we were paying by cash, for example, and cash is an asset for us. So we give extra asset which is coming back.
No. When you mention GST refund, that means you have not received it yet. You have received a letter from the income tax department, but you haven't received it yet.
Okay.
I should not say income tax, I should say GST department. Because you have not received, that is why it is an asset. If it was received, then it is a different story altogether,
Okay. Okay, sir.
right? It is not received, right? Normally, what happens? I know there are a lot of tax courses you will go through. I mean, you will enjoy taxation for sure. So in taxation, there are multiple clauses. So you file your return, and then your return is evaluated by the system. And if there is any discrepancy, based on the discrepancy, the payment is to be made, or the refund you will receive. And again, for that you receive a notice. So a lot of paperwork is there. A lot of work is required, and then you actually receive it. In case of individual, it is very straight. For businesses, a lot of things to be complied with, right? For individual, it is very straightforward. You file the return. Now, normally I file before 31st July, of course, but this year, today is 31st July. Today, I have not filed my return yet, because I have yet to receive I have changed my job this year in this institution. So I have yet to receive my, what you say, ITR statement, Form 16 from my previous employer. So because of that, I am not able to file it. So GST, this year I will file late. And the moment I file, and if I'm claiming refund, because let's say TDS deducted from my institution is more, then I will claim for it, or I will get it within a month time. Normally within a month time, right? For individual, it is very straightforward. GST refund is an asset. We have discussed this so much. Now, what is delivery?
So, but TDS is something different from GST, right?
Sorry?
TDS is something different from GST.
TDS is of course different. TDS is the tax deducted,
At source. Yeah.
Yes. So every month, my employer deducts. So what they do, understand? Based on my 1 month salary, can you forecast my 12-month salary? Of course, yes, right? So they will forecast my salary for an entire 1 year, based on 1 month salary. So they will forecast for 11 months. And based on that, if my income if it is exceeding the limit, that is 2.5 lakh and 5 lakh, and lot more things are there, right? I am not getting into taxation, because we are not in a taxation class. But based on my income, for the entire year, my institution, the accounting department, will estimate my tax liability. And if I have a tax liability, they will start charging the tax from the salary every month, so that the burden is not so much on my self, right? So let's say my liability is 12,000, tax liabilities for this year expected to be 12,000. They will charge 1,000 every month from my salary, right? So that is TDS, of course. That it is called tax deducted at source, because the tax is deducted by the employer himself at source, right? So GST refund is an asset. What is delivery one? Can someone tell me?
Assets.
Please participate in the chat box. I'm so sorry, but it creates a lot of noise and all that. Please, delivery one is asset. Which kind of it is a fixed asset or non-current asset? Remember, because delivery one is not going to be converted into cash within 1 year time, right? It is going to be there in the business for very long. So it is a long-term asset, non-current asset. Very good. What is drawings? Drawings is what?
Equity.
Understand, drawings are reduction in the capital. Please mute yourself, please. Yes. So drawings are negative equity. See, understand, when the businessman is investing in his business, it is capital. But when he's withdrawing the investment, it is called drawings. Now you can ask me, sir, why you don't minus that directly from the capital? Because writing drawings and capital both provides more information to the investors, to the stakeholders. Understand? So that is why you mentioned both for this year, and next year it will anyways get adjusted, because you are adjusting in the capital account. So drawing is a separate account. Capital never has a debit balance. So that's why we never debit the capital account, but it gets adjusted at the end, right? Very good. So it is a reduction in the capital. Very good. It is negative equity, I should say. Yes. What is rent, advertising, postage? Very straightforward. What is rent, advertising? All our expenses. All expenses are incurred to run the business. All our expenses, rent, advertising, postage, all our expenses. What is petrol? Petrol charges or petrol expenses? It is an expense, because I am assuming someone could always say, yes sir, petrol यूज नहीं किया है तो ऋतिक जी आपका आई थिंक voice, okay. So petrol is an expense. Very good. because I am assuming that the petrol utilities are used up during the year. That is the assumption I'm making, that, and that is how it is. You never store petrol in your business unless you are an automobile company, right? So it is not a current asset; it is an expense, because the petrol that you have got from the petrol pump, you must have consumed in your vehicle,
Yes, sir.
vehicle and all that, right? Yes.
Sir, can't it be current asset? Suppose that if it's used in a
No,
machinery
beta,
or
but can you really store petrol, because it is illegal, I think, right? You cannot store beyond a certain capacity, right? So normally you have that in the delivery van only.
but some machinery must use
So yes,
petrol.
in that case, so normally petrol we don't use. We use the term oils and other things. So it has to be specified. It has to be specified. You are right. If oil and lubricants and other things are used, it has to be specified. And
Okay.
they are of course assets, but understand they are current assets because they are used up within a year time. And they become expense when they are used. They become expense from asset. They become expense. Asset into expense. Fine.
Okay. Sir.
Okay. Now let us go to the other side of the balance, trial balance or balance sheet. We have not even prepared the balance sheet. What is capital, guys? In the chat box, please. It is equity. Everyone agree upon this. Let us not discuss this because it is very straightforward. Thank you so much. What is creditors? It is liability because you owe money to someone. You are supposed to pay someone for maybe for goods, maybe for certain service. It could be for anything. It is a liability. It is a short-term liability, right? So creditors are short-term liabilities. What is sales? It is revenue. Of course, it is revenue, right? So no one has any questions on this trial balance we have sorted? Anyone has any questions? Let us discuss that for a few minutes, and otherwise we can move on. No, sir, someone has mentioned. No one has any questions, right? So let us go to the next slide. So what I have done is that, in fact, not I have done, I have just prepared the PPT before. You have helped me identify whether which ones are assets, which ones are expenses, which ones are liabilities, which ones are equity, which ones are revenue. So you can see the classification I have. I mean, I'm visually using this so that it is easier to understand, right? Because normally we use boards, but it is difficult this time. So cash, stock, all these are assets. So I have listed with blue color. The expenses are pink. Income is also pink, but different kind of pink. Creditors are maybe orange or yellowish, I don't know. And capital is green. So that is what I have done, just so that everything is easy. Now remember, this is the format of income statement. You can also prepare the income statement in the T format. Like on one side you have debit and on the other side you have credit. Debit is expenses, credits are incomes. You can also prepare this way. This is a vertical income statement. This is a vertical statement. So please listen to this very carefully. From your trial balance, all your incomes and expenses are transferred to the income statement to figure out the performance for a given period. Once again, I'm saying all the incomes and expenses for a given period are transferred to the income statement. Someone has put up a question. Saloni is there, right? Saloni, I wanted to have a word with you as well. If it is, you have time after this class over, I want to, because you had mailed me, let us discuss that if you do not mind after this class. So Saloni, you have put when advertisement is classified as different revenue, in that where it will be noted. It is not an expense, understand, because as you mentioned, it is an expenditure. And over the period, it gets, see, when you say advertisement expense, I am assuming that you are talking about advertisement expense, which has benefit for more than 1 year, like that Hrithik Roshan example. So when the benefit of that advertisement is for more than 1 year, you cannot expense it in one statement, 1 year. Otherwise, next year. So yes, it goes into the balance sheet. Now the format of balance sheet has changed. So there is no label such as deferred revenue expenditure or miscellaneous expenditure. Now the format of balance sheet has been changed as per the new Companies Act. So it is now like, it looks like this: current assets and non-current assets. And in fact, whenever you have deferred revenue expenditures, I do not want to get into too much accounting, but that is not to be shown according to the new gap. That is adjusted against the profits companies may have over the year. So let us not go into that because there is an accounting standard for that. But yes, it appears in the balance sheet. It is not an expense because the benefit is exceeding 1 year. That's how it is. But where it is appearing in the balance sheet, we will discuss when the time comes, when we are discussing during the regular sessions, right? But yes, of course, it is not an expense for sure. Very good. So in this case, why it is not an asset, I'll tell you. Because there is no specification given that the benefit of this advertising is for more than 1 year. So when the information is not given, I am assuming that it is an expense, or I am assuming that the benefit does not exceed 1 year, and the value is also very small. See, $1,000 only, or 1,000 rupees only. So it does not look material to me to transfer that to the balance sheet and discount it over 3-4 years time, because I don't think that the benefit of this advertising expense is for more than 1 year. So Saloni, deferred revenue expenditures and this advertising expenses are different because of the nature of these expenses. In case of deferred revenue expenditure, the benefit exceeds 1 year. In this case, the benefit is not exceeding 1 year. Again, that is my assumption because the information is not given, but it makes sense. It makes more valid because the value is very small, right? So it makes sense to record that as an expense, right? But of course, in reality, you always know. In reality, you always know. See, we are preparing balance sheet and income statement. A lot of things you do not know because you're sitting there on a table. But when you're running a business, you always know, or your accountants and your finance staff and treasury and those people always know that what is the benefit of this expense. Is it for 1 year or more than 1 year? So yes, sometimes we may have to make choices, assumptions based on the information available. So we'll go for the most possible assumption at a given point of time. So in this case, it is expense. I have talked a lot. So as I mentioned, all the incomes and expenses are transferred to the income statement. Now this is a vertical format. So the format is like this. First you record revenue. The first revenue we have in this case is sales. So sales minus direct expenses. In this case, the direct expense is cost of sales. So sales minus cost of sales is gross profit, right? And then you minus all the other expenses. Now someone may ask me, sir, why such classification is made? Why you do not minus all the expenses in one go? Understand, when you are running a business, you want to know how much expenses are, or how much money you are spending on direct expenses, how much money you are spending on other expenses or indirect expenses. If the proportion of indirect expenses is more, that means uh, whenever company makes a profit, a gross profit, some amount, let's say, company always have some burden on their shoulder, right? Or when company has more cost of sales, or let's say more product cost, or let's say more variable cost, or cost of manufacturing the product. The cost of manufacturing the product is really high and the gross profit is very small. That means company has very little room to spend money on advertising and other things. So it's a kind of a operating leverage, right? It is for operating leverage. So the idea is that you want to understand how much of money of your total cost is spent into direct cost, how much of your money is spent into indirect cost. And based on the direct cost and indirect cost, you can figure out, you can make choices, right? Look at mobile phone companies. I will not take the names now. Look at some companies are not even spending money on advertisement. And if the cost of sales is very small, let's say one company is selling phone for 70, 80, 90,000, and if the production cost or the cost of direct cost is not even 20,000, 70,000 per phone is going in their pocket because they are hardly spending money on advertisement expense. So there are companies which are always looking for higher gross profit, because then they have freedom to decide how much we should be spending on other expenses, right? So the breakup is made so to understand the cost structure, to understand where company is spending. And when you are running your business, you always want to know where you're spending, right? I'll take another example. Let's say I'm working in a coaching institution. A coaching institution may, let's say there is a coaching institution may be incurring on paying me salary and other things, and coaching institution may be spending money on my food and other things, nasta every evening, some snacks in the evening. Now if the snacks and other expenses are really high, and because of that, if it is affecting the bottom line, that is net profit of this coaching institution, companies they will not like this. They will start spending more money on this. They will start controlling on this expense, right? That's the idea. Because how do you make money? You make money by selling more. You also make money by reducing your cost. So the idea is to reduce the cost, control the cost. So that's why this classification is made, right? So direct cost and indirect cost. Direct cost here is cost of sales. It's a cost of sales formula I have already given you. So now you have to see how much expenses you have, how much gross profit you have, 2850. Now gross profit also, you know the meaning of gross in Germany? it means fat profit. Fat, gross means fat. So, so if the gross profit is more, the companies can afford to spend more money on other expenses, other things, right? So having a large amount of profit, fat profit, is a good idea. Right? So in this case, company has a revenue of 5,700. 50% is spent on cost of sales. 50% is available for gross profit. Right? Now let us minus all other expenses like rent, advertising, postage, and so on. The expenses are 2750, and the net profit for this business is only 100 rupees. So that means this year the profit has gone up by only 100 rupees for this business. I will not discuss that whether this is a good amount or bad amount, because I do not know much about this business. I do not have much information about this business. But at the same time, I can also say that the profit available to the investors and other people, other stakeholders, is very small. The net profit is very small. Right? Anyone has any questions? Because it seems that I am only talking for some time. If
Sir, net profit will come like parallel to 100 rupees, or is it like this only?
No, it is a value. It is not percentage, beta.
No, sir, that is written like in front of net profit is written 2750. So
okay, that's my mistake. Sorry. That is my mistake. That is a copy paste cut paste problem. Sorry. Net profit is 100, guys. I'm so sorry. Net profit is 100. If I could change, this is an image, I think. I may not be able to change it. It is an image. I will change it in the break. I'll change it in the break. Yes.
No problem, sir.
Guys, fine. Thank you, beta, for raising that query. Net profit is 100 rupees, guys. 2750 is the total of all these expenses. So 2850 minus 2750 is 100. Net profit is 100. That is just, I put it in a wrong box, right? That's it. Wrong cell. That's it. Okay. So it seems that people do not have any queries. That is what I saw in the chat box. They are understanding this. Wonderful. So all the incomes and expenses are going into income statement. What about assets, liabilities, and equities? They go into. So this is another format of preparing income statement. There are two statements: trading account, profit and loss account, and then there is one more normally, profit and loss appropriation account. So trading account is focusing on computing the gross profit, and all other expenses are written in profit and loss account. So this is another way of preparing the account, T accounts, right? I'm just showing the format. That's it. So there is a vertical format. This is a T format. Okay. So all the assets, liabilities, and equities go into balance sheet, and balance sheet has two sides. On the right hand side I have written assets, on the left hand side I have written liabilities, right? And the left side image is the trial balance. So all the blue colored boxes, green colored boxes are all these are belonging to the balance sheet, because the expenses and incomes are left out, right? Now can I ask you a very silly question? Can I write asset on the left hand side and liabilities and equities on the right hand side? Can I do that? Because remember, balance sheet is not a account. Balance sheet does not have debit and does not follow debit and credit rule. Like debit should be left side, credit should be right side. So most of them are saying no, sir. Thank you, beta. Someone is saying yes. Yash Gupta is very much sure. You can also write it on the left side. Very good. So Yash Gupta ji, can you tell me why, beta? Why I can do that? Tell me, beta. You can talk, beta. I am allowing you, please. Yash Gupta ji, please.
Yes, sir. Sir, it won't make any difference if we interchange its position. That's why.
In fact, in America, companies are writing assets on the left hand side and liabilities and equities on the right hand side, because it is a statement. It is just a sheet showing summary of all the expenses. So it's okay, beta. I'm saying it's okay, right? You can do that, but we will. I will tell you which format we are going to follow in coming sessions. In fact, we are going to follow a vertical format or this format only. But I am saying that it is fine if you write assets on the left hand side. I'm not allowing you to prepare when you submit your answers for your examination. Do it this way. I'm just saying that it is fine, right? Please, Yash Gupta ji, if you could mute yourself, beta.
Yes, sir.
Thank you. So guys, so I have not classified the balance sheet. Understand? I have not classified the balance sheet like non-current asset and current asset, non-current liabilities and current liabilities, because we are in initial stages, and we are going to understand this better during regular sessions, right? So let us transfer all the assets. So cash is an asset we have established. Stock is inventory is asset. GST refund is an asset. Delivery one is an asset. So delivery one is the only non-current asset or fixed asset. All others are current assets. Total is 30,220. Let me transfer creditors on the liability side because creditors are liabilities, right? 1120. And then equity may I will write 30,000. Now, in fact, I wanted to do something, but this computer does not allow us to do a lot of things. Capital is 30,000. Net profit belongs to the owners, always remember. So that will increase the capital value and minus the drawings because drawings are negative equity. So that comes to 29,100. 29,100 plus 1120 is 30,220 because balance sheet is so magical. If everything is fine, it always matches because it is magical, right? Is it because it is magical? Please participate. Is it because it is magical or some logic is there? Someone can
Sir, as
participate.
we are following double entry system, it should get back.
Who is saying this? Viren Doshi?
Viren, yes.
Viren, yes, of course, because we follow double entry system. It always has to match because we see. Don't forget what we are doing. When we debit something, we also credit something. So it has to match because both the side has to match. There is logic to this, of course. It is not just magical or some gimmicky thing, right? It is possible. Yes. Thank you so much. So anyone, please ask me questions because I'm getting very less questions today. Please ask me questions. No one has questions? Are all of you are super smart? Totally very good. Hello.
Sir.
Yes.
Sir, it is necessary that sir you return capital and 30,000. So sir is mentioned in that particular dollar column.
See, I will tell you what I have done. I have prepared two columns, one inner column, one outer column. So liability side, so inner column talks about the computation because it doesn't look in accounting. We never show computations in the outside column. So this dollar column is the actual amount column, and this 30,000 plus 100 minus 1,000 is the computation to arrive at 29,100. Because in accounting, we never write values with negative figure in the account, in the amount column. Right, beta?
Okay, sir. So we only put the total amount in that column.
Right. And do not focus too much, at least right now, do not emphasize too much on the format and other things because you are not going to be accountants. It's fine. I will tell you what you should know when you present the information during the term one sessions, right? Yes.
Oh, okay,
yes, thank you, beta. Everyone has any double entry system itself is magical. That is very much true. Accounting is magical. That is true, right? And no one has questions? Okay. So let me give you some work. I want to discuss this question in the next class. So we will have more time in for taking down the questions and discussing other things. Fine. So guys, this is the question. Please, everyone take the snap of the question or read the question, whatever is comfortable with you. Anyways, the session is recorded now, so you can always access. You can take the snap, please.
So how will we access the recorded sessions? From where we will?
The moment you will join, everything will be registered. You should be able to access it. So
Okay,
it will be in the process. I'm not because I'm not a part. See, the university is so big and a lot of activities are happening. Certain things I may not be allowed to know, right? Because right now. So
excuse
yes.
me, sir.
Huh?
Sir, there is one more thing. When we leave the meeting, there is a option that save files. From there, the whole chat file and everything will be saved. I think from then there also we can access the whole meeting.
Is it allowing you to download the video as well? I don't know.
So recordings will be with the host only. It won't be, or the institute. It won't be with the participants.
Exactly, the chat is always being downloaded. So
chat is going to be downloaded, but the recording part may not be. You may not be allowed to access. But when you will, they are recording this. Understand? So the idea is that it is available. It should be available to you in few days time, or maybe today. Right? I don't know. So because from today onwards, it is possible to record the sessions. And so don't worry to get the session. Please mute yourself, Prashant Shah, someone please. Yes, I have done that. Fine, please read the question. Anyways, you please take the snaps right now, and those things which I could share, I will definitely share with you. Did you receive the all of you received the mail regarding this last class discussion and or last to last class discussion as well as solution to that? Yes, and all of you, none of you have queries, right? Pinku? I think some student had, but most of you did not have any query, right? I had prepared that in a very rough way because all of you must have done it properly. That's why. Yes, please read this question and also read the events given in the next right hand side. So you are given cash, accounts receivables are given 0 value, inventory is given, inventory is stock here, inventory is goods here available to the company, unsold goods to the company, prepaid rent expenses or prepaid rent is also given, equipment is given, accounts payable is given, notes payable given, paid in capital is given, paid in capital is like capital, sales revenues are given, cost of sales is given, wage expenses are given, and utility expenses are given. Before, see, the trial balance is actually given to you. So what we have to do, I'll just tell you. Before that, let us classify all of this into assets or whatever. Yes. So what is cash? Put that in the chat box, please. No one has questions. So let me ask you now. Let me go very slow now. Let me go very slow because some students are always requesting that I may be too fast. Let me ask individually. Jhanvi Joshi ji, what is accounts receivables? Please, if you could participate. If you cannot talk, you can chat. Jhanvi ji, please. Jhanvi Joshi. Jhanvi, can you hear me? Jhanvi, please. Okay, she's okay. Asset. Okay, it is an asset. Current asset or non-current asset, beta? Please, others do not participate because she is mentioning that in the chat box. Current asset or non-current asset? What is accounts receivable? If you could explain, beta. Can you not unmute yourself, beta? जानवी जी आप अनम्यूट नहीं कर सकते अपने आप को my mic is not working, so fine. See, guys, you need to understand this whenever you are using a laptop, because if the laptop is old, then you may require two cables. You may require headphone with two cables, one for mic and one for speakers. So you need to understand this. If you are using a new types of laptop, there only one hole is given for the cable. In that case, your mobile phone headphones or hands-free or earphone, whatever you call it, would work, right? So please arrange them because you would require them. Arrange them when I say that. Please have that handy so that we can discuss properly in the next session. Next we have inventory. What is inventory? What is inventory? Asset. Very good. Very good. Very good. Very good. Now I will ask someone. Sure, from next time I will take care. That is fine, Janviji. Just so that we could have better discussion, understand. That is for your all of you's benefit, because by asking you, I want to understand to what detail you understand these concepts. That's what. Fine. Prepaid rent, I will ask. Please do not mention. I am requesting, please, guys. Can I ask Komal Shah? Komalji, may I ask you, beta? What is prepaid rent?
Yes, sir.
What is prepaid rent? Tell me, beta.
Sir, prepaid rent expense is a liability. No,
Okay.
it's an asset. Sorry, it's an asset.
Why it is not a liability? Tell me, beta. Why it is not a liability?
Because sir, it is prepaid.
Okay, it is prepaid. So, but can you explain?
No. Sir, it is an asset because it is not an asset because it is already prepaid and currently it is an asset for you.
Okay. So that is why I wanted to. I'm asking you because I want to understand how do you look at all these terms and concepts. So understand, beta. You, when I say prepaid, means you are paying. Means this business is paying. And when I say you, I'm talking about you as a part of this business. You are this business, right? So when you are paying rent in advance or prepaid rent, when you pay something in advance, that has economic benefit. The economic benefit is that you can use this premise next month also, or you can always ask him to pay the rent back because you are paying in advance, you are paying more. So the economic benefit is that you have benefit exceeding 1 year or 1 month in this case. So because it has economic benefit that you can use the premise next year, next period also, next period beyond this period, it is an asset. It has economic benefit, right? So it is a current asset also because the benefit in totality after you paid from that day, it is not exceeding 1 year. It would never generally exceed 1 year, or the amount is not that large, material enough that you call it non-current asset. So that's why, right? Fine. So it is a current asset. Fine, Janvi ji, Komal ji. Fine, Komal.
Yeah.
Understood better now, right?
Yeah.
Next is, let me ask, may I ask Saloni? Saloni ji? Saloni not in the chat box. Saloni Maheshwari ji? What is equipment at cost, beta Saloni ji? So you are putting in the chat box. Okay. Yes. What is it, beta? Tell me. What is this equipment at cost? What does it mean? It is an asset. Okay. What do you mean by equipment and at cost? What does it mean? It means that this is the cost price of the equipment, the price at which you had purchased, the cost for you of this equipment, not adjusted for every year depreciation. So equipment at cost means this equipment is at cost means the value which is given in the outside column is the price at which you had acquired, purchase price plus the cost you have incurred to use this equipment. So let me give you so this is not asset minus depreciation. Why? Because you can see at cost. When I see the term at cost, the depreciation is not deducted. You are maintaining another account that is accumulated depreciation. In this case, accumulated depreciation is not given, but that doesn't mean that the business might have started this month beta. That is why there is no accumulated depreciation, right? That is the logic. So what I am saying is equipment at cost means the cost price of the equipment is there outside column, the price at which you had acquired the equipment. So if I'm buying a MacBook, let's say, and if I'm installing SSD, because without SSD I cannot use the MacBook, the price of this office equipment, this MacBook for me is the price at which I had purchased plus the cost of SSD. That is a cost. At cost means I don't know which standard you must have studied the concept of cost for your generation, but cost means purchase price plus all the expenses you have incurred to put into place, to put into use. Yes. What is accounts payable? Current liability. Very good. What is notes payable? Liability. What is paid in capital? What is paid in capital? Equity. Yes, it is equity. Increase in equity. Yes. What is sales revenue?
Income.
It is income. Yes. What is cost of sales? We have just discussed. It is a direct income, right? It is direct income. Na? Cost of sales is direct income, right? No. It is an expense. It is a direct expense. Yes. Thank you, Peter. Thank you. What is wages and utilities? The name itself suggests that it is an expense. These are expenses, right? Okay. Fine. So it's 1:38 right now. So we have. Yes.
Equipment at cost is
this is the cost price of the equipment, not adjusted for depreciation yet. The depreciation is not deducted. So generally there are two approaches to show equipment in the balance sheet, right? If you are a company, then you would never do that. But if you are any other business, a small business, then you can always show the asset at cost minus depreciation till date. That is cost minus. So it will show you the book value. Book value means the value visible in the balance sheet today, adjusted for every year depreciation. But whenever I say at cost, this value is the cost price of the equipment, the price at which we had acquired, not adjusted for depreciation till date. ठीक है ना?
Yes.
Yes. So
Sir,
yes.
small question, sir.
You can ask small, big, fine.
Sir, if at cost is not there, like I'm asking generally, not in this case specifically, at cost is not there, so we can assume that depreciation is not considered.
So in that case, what you have to do, understand, in that case, you have to also look at whether any depreciation account is existing in the balance sheet. If accumulated depreciation or provision for depreciation account is existing, that means it must be cost. If it is not existing, that means two things: the business has just started, or the company is directly charging the depreciation on the asset.
Okay, sir.
Make sense?
Yes, sir. Okay.
Yes. Okay, guys, so I will just read the transactions or events. I'm using the word events because these are not transactions. Right? There is no actual exchange, right? But just because of passage of time and just because of usage of something, there is an event which has to be accommodated in the balance sheet and income statement. Let us look at the events, accounting events. Prepaid rent above was paid in the month of June. मतलब ये last month pay किया था 2250 was related to the month of July. Now we are preparing the balance sheet and income statement for the month of July. So what would happen? Can someone discuss this with me? We can have a discussion, please. Or let me ask someone randomly, so that I also need to remember your names as well, right? Can I ask Shail Shah, Shail, I don't know, Shail Shah, Shail Shah, Shail? Are you there, Shail? Okay, he's not able to. Shilpa, Shilpa ji, Shilpa, CHIPA. Shilpa ji, hello. May I ask Shubham Mishra?
Yes, sir.
Yes. What do you mean by this first event or transaction, whatever you call it, doesn't matter?
Sir, it will be considered as an expense because we are preparing on the 30th of July and we paid it in the month of June.
Yes, very good. So, guys, see why I have identified this question, just to tell you what really happens in business or accounting world, right? Last month it was prepaid. Now this month it is a rent expense because now you do not have any economic benefit beyond this period. Now 30th July has come. That means this rent does not have any economic benefit after today or after 31st July. So that means that this prepaid rent which was paid last year becomes expense this year. So what is the journal entry? The journal entry to make it expense is rent expense account debit to prepaid rent account. So now you do not have asset. So to reduce asset, you credit. Assets are going out credit and rent expense is debited because the expenses have gone up. Right? Very good. Let me ask. Thank you, Shubham ji, beta. Thank you so much. May I ask Sparsh Bindal or Bindal? I don't know how do I say your name. Sparsh. First, you have unmuted yourself. I can see that. What is depreciation for the month of July? What is the journal entry for this for the month of July? Sparsh has put. Yes. Okay, here I am. Please, Sparsh. I can see you in chat box. Yes. What is the journal entry or what does it mean, beta? Depreciation account debit to fixed asset account, but let us not follow that approach right now because I have already discussed this. Depreciation account debit to, we will not reduce the assets account. We will show the assets account at cost. So this is the entry. Right? So depreciation is the reduction in the value of the asset due to wear and tear, due to passage of time, due to a lot of other things. Maybe because of technological changes. So depreciation simply means reduction in the value of the asset, and we had spent so much time on this concept last time that the amount may be arbitrary, but reducing that is not arbitrary. So depreciation is diminishing made in the value of, yes, diminishing. Okay, so reduction in the value of course. So the journal entry that we are going to use is this depreciation account debit to accumulated depreciation account because I do not want to reduce the assets account. Because when I reduce the assets account this year, my investors may not understand what is the cost price of this asset, what is the depreciation till date, So this entry provides more information. This presentation provides more information. So in the balance sheet, I will show asset value at cost minus the depreciation till date as well. Fine. So we will follow this approach. This is also fine. We find it by adding purchase value with scrap value. Oh, okay. Sparsh, of course, you must be knowing. Yeah, I am not denying that. You must be knowing more than me. I'm not denying that. Thank you so much, beta. You must be having a commerce background, or you must be knowing. I'm not getting into too much definitions and everything. I just wanted to make sure that you, because I don't know you guys. That is fine, Sparsh. That is totally fine, Sparsh. I'm not at all sarcastic when I say this. Don't worry. Can only type. Fine, fine. Can I ask Shushant Batra for the next transaction? What is interest on notes or note payable? सुशांत जी आप बैठे हैं? Okay, maybe technological issues or something else. Fine. So guys, it's 1:45. I do not want to take your lunch time. We will finish this question in the next class, and we will also start discussing. Oh yes, Shushanji, thank you. Now, Shushanji, please hold on to this question. We will discuss when we come back for sure, right? We will start with this third journal adjustment. Yes. So please, you only remind me in case I forget to ask you. Thank you, beta. Please, you may leave the meeting. Right now, you can ask me a lot of questions. After we are done with this question, I will take questions. I will also answer questions which Himani had raised. So we'll definitely discuss. Saloni, if you may stay back, beta. Other than that, everyone please leave the meeting, please. Thank you so much. Bye-bye. Saloni ji, shall we discuss right now or later? Saloni ji, hai aap?
Yes, sir.
Is this the right platform for discussing that, or we should discuss over mail only? Because what do you say?
Sir,
Okay, fine. So we'll discuss over mail. I understand. I totally understand. Let us not discuss that here. Because I was occupied with a lot of things that time. So it is difficult for me to come back to you after your every mail. So fine. I am suggesting you that use YouTube. It has amazing. You may have to search, right? But you will find amazing lectures on the things you have mentioned. Second to that, you mentioned about the books. I will also send you the list of books very soon. Let me get some time. I'll definitely reply back to your mail. Fine, Saloni? Hello?
Yes, sir. Sir, my main problem was, I know certain concepts and I'm not sure that I know are correct or not, because those are
When we start our regular sessions, that time, of course, we could discuss this over. You can always call me. I'll put my number, my office number, as well as this thing in my course outline. So you will have number to contact me, and I will give certain hours in a week to every student. In fact, so during that time also we can discuss this for sure. So I understand. Of course, I got your point. I will share. Let me get some time. I will share video links with you, and I will also of course you can always ask me, so it's nothing to worry. Whenever you are stuck somewhere, you can always mail me for sure, and I will also share the links of books.
November only.
So please, so you start preparing and you ask me questions. Totally fine, right? And I will also share videos and books links to you. Fine, right?
Okay, sir.
Okay, thank you. Shall we end the
Sir.
meeting for everyone? Yes, thank you.
Yes, yes, sir. Thank you, sir.
So I'm ending the meeting, guys. Thank you.